Okay, listen up. You probably have been trading ICT for a while, but you just hit a wall. You wake up every single day, you think you know your buys, you know where the market is going, you know all the PD arrays, the fair value gaps, the order blocks, the breakers, but still you're losing every single day. And you just cannot get profitable. You have 4 things that tell you how to be bullish, 4 buys, you can frame both directions. Very annoying. And it makes sense. ICT did not make this easy. He created 100 PD arrays and you just need to navigate around all of these. I was at the exact same point over 3 years ago where my win rate was so low, I was losing every day. I was losing salaries in a day. But it was before I decided to take it in my own hands. And that's exactly what I'm going to do in this video. How do you simplify ICT? What are the concepts you actually need to focus on? Because there's a lot of background noise, right? Let's actually dive into simplifying ICT trading, increasing your win rates, and just rinsing prop firms. And really become consistent and hopefully down the line become a full-time trader. Without further ado, let's go ahead and look at the first concept that actually opened my eyes simplifying ICT trading. And that's going to be the market maker model. You have 2 types of market maker models. You have market maker sell models and you have market maker buy models. And market maker models give you the direction of the market. It starts with an original consolidation. We have the sell side of the curve where we're selling off. We see accumulation, expansion, relation, expansion. At some point in a key level, we reverse, smart money reversal, accumulate, expand, taking out the original high right there. It's called a market maker buy model, vice versa for a sell model. The price goes up, then does a smart money reversal and starts trading lower towards the lows right here. So I have a buy side of the curve, sell side of the curve. On the YouTube channel, I have a dedicated videos to understanding market maker models. I will leave the link to that inside the description, also a little link to that right here. And the 2 concepts I'm discussing today, where one of them is the market maker model, has such a high win rate because it simplifies so many of the ICT concepts. It doesn't matter if you're trading for value gaps, order blocks, breakers, doesn't really matter because all those concepts come back into these models. So what you'll see inside a market maker model is that we are on the sell side of the curve right here, and you will see price accumulating, then expanding, accumulating, expanding, accumulating, expanding. Same here on the buy side of the curve. But what you will see before it expands, you see a little manipulation. If you know the Judas swing, the ICT power of 3, the AMD, you accumulate, manipulate, distribute. We accumulate, then manipulate, distribute. Then we accumulate, manipulate, distribute. And before the distribution, many times you have a little accumulation here as well. Accumulation, manipulation, distribution. And that's the second concept. To really simplify ICT trading, you need to combine the market maker model with the AMD. So when price starts a sell model, for example here, most amateur traders just try to catch the move here and hopefully make some money by shorting this move. But they'll get stopped out because of the manipulation. If you want a high win rate, you need to wait out that manipulation. So you see displacement, you just wait for price to come back into fair value gaps to then start a distribution of a move. And you can use market maker models on all time frames using time frame alignment. If you have a weekly level, trade a 4-hour market maker model. If you have a 1-hour level, trade a 5-minute market maker model. So what I mean by that is, let's say we are here in a 1-hour structure. If we zoom into this move right here, this is a market maker model of itself, but then on the 5 minutes. So this on the 1 hour, if you now go back to the 5 minutes, you will see this happening. You will see a little mini market maker sell model. So combining the accumulation, manipulation, then distribution, like your accumulation, manipulation, distribution, that will give you the buys every single day. But the question is, how can you combine these 2? There's one part of glue you need to have to put these ones together. And it is called time. If you combine time with market maker models and the power of 3, you are golden and you will see the market through a completely different lens. Let me show you. You will start to see market maker models everywhere. Here, accumulation, expanding, accumulating, manipulation, distribution, smart money reversal, accumulation, manipulation, distribution, accumulation, manipulation, distribution. You're going to see this everywhere in your charts on all the time frames. So you can use this for both your bias, but also for your entries. So in this example as well, if you're at the 1 hour right here, then when price comes back into that 1 hour value gap, then is when you drop to the 5 minutes to find a mini market maker sell model. You wait for price to accumulate, manipulate, and then distribute on the 5 minutes. Same here, this little wick right here is during the New York Open. This on a lower time frame will look exactly like this, and there's where you can find your entries. So what if you now combine time together with the AMD and a market maker model? So right here, we have a sell side of the curve, accumulation, distribution, 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 leaving all these low resistance liquidity. Low resistance liquidity are swing highs that don't take out any other swing highs. After we sweep liquidity, what liquidity is swept here? It's a weekly low has been swept here. So there is a key level that has been violated, and we see some massive reaction from this. And if you look at the time, it's now 9:30, New York Open. And every day at 10 a.m., there's a new 4-hour candle opening. So my exact model, I'm using market maker models together with the AMD, accumulation, manipulation. That is right here. And now I'm anticipating a lower time frame market maker model to form. Anticipating price to aggressive sells, aggressive buys, and then start trading upwards towards at least these highs. And I'm using that by predicting the next 4-hour candle. So where on the higher time frame, we see a liquidity sweep in a key level. Here's where we expect a reversal. So we're expecting here a mini market maker model to form. On the lower time frame, we want to see accumulation, manipulation, distribution right here, and then start the market maker model. We then drop to the lower time frame. You see accumulation, manipulation, and the distribution is starting. So when that's starting, look for where is the lowest liquidity, where are we most likely headed. I would say the swing highs right here. Relative equal highs is also compared with session liquidity, Asia high. That could be our draw on liquidity for this specific trade. And now combining time with this, every day at 10 a.m. there's a new candle opening, a new 4-hour candle. And based on this expansion, I'm expecting the next 4-hour candle to be a bullish candle. And if you understand the autonomy of a candle, we open, then we trade lower, manipulating, setting the low of the candle, and then start trading higher towards the high of the candle and then close. If you do that at the 4-hour, I like to place at 10 a.m. every day. You can also place at 10 p.m. for Asian session and 2 p.m. for the PM session. I'm waiting for price to open. That's going to be here at 10 to trade lower and then start distribution higher. So from that perspective, let's drop even lower to see how we can find the entry. So the new 4-hour candle just started, and we're just waiting for price to trade lower and then start creating buy structure. Here's the bearish for value gaps, and then here we start trading higher. So we see an inversion for value gap sitting here. We have bullish for value gap right there. Entry, TP at the highs, 412. The price is now allowed to trade even into this bottom per value gap. And then you can just let price do its thing. So we have an accumulation. I'm anticipating this to be the manipulation, setting the low of the candle. And then we are supposed to start trading higher. We see there's another bullish for value gap created here with an order block. And price trades to the drawn liquidity. So here at the bottom, we see accumulation, manipulating, distribution. If we zoom out, we see the start of a market maker model being formed with the sell side of the curve right here. And now the buy side of the curve is starting. We're actually looking at the live chart right now, so I cannot show you this, but in the next couple of days and weeks, I'm going to trade this to the highs. Just like, for example, a couple of weeks ago, where we saw the exact same thing happening. It's where we take out liquidity here. Aggressive sells, aggressive buys, starting from the sell side of the curve. Right here, starting the buy side of the curve. And here in these moves, you can drop to the lower time frame to find your entries. Also right here in this for value gap, lower time frame, find your entries. So find mini market maker models inside the bigger market maker models to have your buys correctly, and then use the power of 3. They use time to find high probability entries. And the one I show you here is exactly one I took this week. So it's not in hindsight, it's actually taken in real time. And I'm going to hunt this exact same model the next week and the week after. It's called a 10 a.m. game. So every day at 10 a.m. we look for this power of 3, the AMD, where we wait for price to open, manipulate lower, expand higher. If we are bearish, we play it vice versa. Wait for price to open, then trade higher, and then start the sell model. But this buys on lower time frame, it's only high probability if you understand that higher time frame picture with the market maker models, with the power of 3, and then combine the 10 a.m. game to rinse prop firms and skyrocket your win rate. I created a 10 a.m. game cheat sheet with all the entry criteria that I use every single morning when I trade. I'll leave the link to that inside the description. So simplifying ICT concepts with market maker models, the AMD together with the 10 a.m. game is all you need to start making money. If you want to dive deeper into market maker models, I'll leave the dedicated videos to market maker models somewhere around this video and definitely also in the description. So make sure after this video, you dive to the market maker models to fully master that. On this channel, there's also a video about the 10 a.m. game. I'll leave that step-by-step plan in the description so you can keep learning, keep growing, and start getting payouts.